Greetings everyone, welcome aboard. My name is Joseph James, schooltrade.com. It's August 11, 2010. Happy Wednesday to you. Had a great day in the room. A little bit challenging today, but we knew, of course, coming out of FOMC day yesterday, right? FOMC day widened out our trading ranges for us. And so now we get a chance to play inside these trading ranges, which may not have been there without the FOMC announcement yesterday. So coming out of the FOMC day announcement yesterday, on Tuesday, here we are now on Wednesday morning. And before we talk about the trades we took today, guys, I want to remind you guys, if you're on the blog right now, you got to follow the blog. Make sure you're on the newsletter because we've got a brand new free service on the blog every day, and that is our nightly review. All right, so every evening at about probably 10 o'clock Eastern time, 7 o'clock, 8 o'clock Pacific, I'll be publishing our nightly review. Now, for the past 2 days, we have been 100% on all the calls on that nightly review, guys. So follow the blog, sign up for the newsletter. That way you always get that nightly review. And don't forget, guys, we got online support, right? 24/7 there for you. You can use the search box to search the blog. You've got our YouTube page, right? Our Twitter page, Facebook, right? And don't forget, guys, to follow us and join the newsletter. All right. We had a pretty good day today. Kind of challenging, though. Again, like I said, it's summertime, right? So it's still the month of August. But we had a decent amount of movement today, which really kind of gave us lots of patterns, but I took almost a full stop on gold today. In fact, we had a scratch on gold, almost a full stop on gold, and of course an early exit loss on the Russell. So today was a little bit more rocky than we saw yesterday, before that. But we had a lot of patterns today, and you can see we spent the majority of our time on gold, the euro, the Russell, and crude. Okay, we took 1073, 93 ticks. Now the euro, of course, at $12.50 per tick is going to be a little bit over 93. So 93 ticks, over $1,000, and that brings our weekly total $28.76. Our monthly total now, we're over $10,000 for the month, and we're just shy of $117,000 for the year of 2010. All right, let's keep moving. Let's take a look at what happened today. Now it's August. All right, and like I was talking yesterday, I think August is the longest month of the year sometimes. Right? When I was a kid, August lasted forever. And now I'm an adult, right, trying to, of course, get through this month of August, and it still lasts forever, right? It seems like we got 8 weeks long here in August, but it's still August. We got 2.5 more weeks left, guys. And remember, we had FOMC day yesterday, so we're watching today, looking for opportunities to trade with that wider trading range from yesterday. We saw wedge patterns and channels. Now, wedge patterns, right, channel patterns, these are all both these are really can confirm lack of volume, right? Wedge patterns, channel patterns. These are not patterns we see in high volume environments, right? These are low volume environments. We saw those across the board today. And we saw the gold. The gold really is what gave us the first couple moves of the morning here. The gold market, if you guys recall from yesterday, right, on the blog last night, we talked about the gold being inside that wedge. Buy the lows, sell the highs. Well, we saw the gold here at the highs of its wedge on our 34 range chart, and that's what got us going on the gold today. Then we also saw the dollar breaking out, right? The dollar was going sideways, and we had it pegged either going short, right? We're going to go long the euro. If the dollar went long, we were going to go short the euro. So we were watching the euro using the dollar a little bit later on this morning, and that's pretty much how the entire day ended up. Let's go to the gold here first. Now, the gold is where we made most of our money today, but we had a pretty tough time with it. I gave some money back here, as you can see, on a stop here on gold. But let's take a look real quick, though, what the gold market looked like first. On the left side of your screen, here's my 21 range. Now, 34 range was a little bit too slow for us, so I used a 21 range here. If you guys have questions about why I'm using a 21 range instead of a 34 range, it has to do with the fact of us bouncing over that 10-10 contract on gold. So when we skip the 10-10 contract on gold, we jump to the 12-10 contract. I used a faster, slow time frame to get more levels so we could use those levels. All right, so that's why I used the 21 range instead of the 34 here. All right, again, ask me to repeat that tomorrow in the trade room, and I'll be sure to. Okay, now this trade right here, this was called in the blog last night. If you go to the blog right now, look at the nightly review and click on gold futures, and you'll see this trade called last night. Right, that was a short here below 1204. So of course we picked up all this money last night, all the way down to the lows here, then bounced back up, right, and now here we are at the highs of our wedge. Okay, so that's where we found ourselves this morning when we opened up our charts. About 8 o'clock Eastern time, we're at the high of the wedge. All right, now follow me to the lower right-hand side here. Now this is on a 4 range chart, And this 4-range chart, and this is going to be a scalper's time frame, right? A 4-range chart, 89 tick chart, 1 minute, 2 minute chart. Okay, these are fast time frames. And so you can see here, here's my wedge high. And I'm looking, of course, now to sell the highs. All right, guys? So we found ourselves here this morning at the high of the range, right? The high of the wedge. And so the first thing we're looking for here on gold this morning is a couple short entries. We're going to sell those highs. If we break above, we'll look to buy the lows. But of course, what we saw first was selling those highs. So here was the first trade of the day. We knew on gold here we're at the high of the wedge, right? There's my wedge high. And so of course, the easy thing to do here is we're going to come up, right, and then sell the bounce off those highs. Now you'll notice here we had one right here. Now I couldn't get into this one because this is at the news. We had 8:30 news this morning. Okay, so couldn't take the first one. But the second one here, of course, actually gave us a better entry time. You can see it bounced back up, gave us a better entry when it came up and test these highs up here. There's my swing low, and there's your 2-step short. Now I also took a wave pattern short here for re-entry. Right? Both of them, of course, were winning trades. The only thing wrong with the wave pattern here was I got a bad fill on it. Right? I got filled down here at 7.6, and you can see what happened was it quickly there reversed against us. And by the time I realized I made the wrong decision, right, bad fill, momentum curled, and I get out of my trade for basically just a scratch trade, right? In and out at the same point of entry. Okay, the first trade though was a 2-step short. And you guys can see here, the 2-step short is actually a really easy pattern here because you come up, you'll test the highs here, right? Test the highs of the wedge. We mark up our swing low, get below that swing low, and there's your 2-step short. And then the wave pattern short, you can see we come up, we bounce off this trigger line. That's your wave pattern short. But again, like I said, I got a bad fill on that one and had to exit for a scratch trade. So we took at 12:08.1, just before 9 o'clock this morning. We took 2 off at 4, 2 off at 1. Okay, 8 plus 2 is 10 ticks times $10 is $100. So we made $100 in the gold, again, knowing we're at the highs, looking to sell these highs. Now, we messed around with this area on gold here for quite a while. In fact, if you guys were with us this morning, you heard me say I was being a little bit more aggressive because we knew once this thing broke the downside, it was really going to tumble. But I was a little bit in the wrong side of the market. I was a little bit ahead of time, and I think, guys, being a trader for so long, we learn to recognize this stuff and we see it happen. Okay, I see, of course, right? Remember, we knew at the high of the wedge. Now, being a professional for a long time, you'll pick up on certain clues and you'll try sometimes to kind of, get a little bit early. And so that's what we're trying to do here. We're trying to get in a little bit early, a little bit ahead of the time. That way I could really get this runner to tumble all the way down back to the lows. Well, it didn't really work. If we're going to try to predict, if we're going to try to be cute and try to thread the needle here, if I'm going to try to be ahead of the game, right, aggressive entry calls for aggressive exits. Aggressive entry, aggressive exits. So if I'm going to be aggressive and try to get in here a little bit early, I've got to be aggressive with my exits, being aware that I may have to cut this trade early. And that's exactly what happened here. So you can see here, we're still flirting around with this wedge high here. Right? We're still flirting with this wedge high. Here's the wedge high. And so now here at 9:05, we've come and gone through 9 o'clock. Crude oil opens up. And now here we are. This one, of course, I couldn't take. Momentum was pointing up. Right? So couldn't take the first move down. And again, remember, this is after 9 o'clock now. There's my breaker pattern short. So I take the breaker pattern short, coming down, right? I couldn't take the first one. The first one happened on momentum pointing up. So then, of course, we come down. I grab the second breaker short. 1206.2 is the fill. I took my +4, moved my stop down to entry. 2 off at 2 is 4. 8 plus 4 is 12 ticks or 120 USD. So we put $120 in our pocket on the breaker pattern short. Again, guys, we're simply looking to sell these highs, right? Selling the highs of the wedge. Well, of course, as you guys know, a great combo pattern, which is down here now. Let me show you guys this. Right, here's a great combination trade pattern. When we have here's your support level here. As you guys know, I'm going to break below that support. I'll mark my swing low, and then I'll break the downside. Well, of course, remember, we've also got this trigger line coming over. And if I can test that trigger line, right there, okay, below the swing low, that's my wave pattern short. Okay, so